Have you ever wondered and asked yourself how Forex market formed and where the money that creates the Forex market come from? In this video, I'm going to dive deeper and explain to you very well. Everyone who involved in Forex market, the amount of money they have that affects the fluctuation of the price in the Forex market. You are going to know the amount of money they have in order to create this market you are now watching. Forex trading market is like a pyramid scheme. There are minorities at the top of the pyramid and who control the market with too much amount of money, and the majorities who are at the bottom of the pyramid with few amount of money, like retail traders.
My name is Bruno FX Magnet. I am a professional Forex trader and a digital entrepreneur.
Don't forget to subscribe, like and share the video to your friends who need it. Thank you very much. Let's get started. Lesson 1, Part 8, Forex Market Players. In this video, you are going to understand very well all people who involved in Forex market and how they make this Forex market. Alright? Players of the Forex market range from those who trade billions of dollars a day to those who trade just thousands of dollars a day. The world's big banks are the main market players. Central banks of the countries are also market players, but they are not always involved in the Forex market. The succession is range from large banks to the smaller banks, big commercial companies, hedge funds, and other institutional investors or speculators, the retail Forex brokers to the independent retail traders at the bottom of the market structure. Alright, let me explain to you in details about those market players by starting on large or super banks in the Forex market. The largest banks are the major market makers of the Forex market. They handle very large Forex transactions of the billions of dollars to their clients, such as other institutions or companies, and also for themselves. These large speculators may also conduct currency transactions directly in the interbank market if they deal in large amounts and have credit standing with the large banks. The resulting massive flows of money handled by these large banks are what primarily drive currency prices. This big money network forms the interbank market, where large banks deal with one another, and is where most of the trading activity takes place. The amount transacted out by these major banks results greatest amount of money of the total daily volume in Forex market. These big banks include Citibank, UBS, JP Morgan, Goldman Sachs, Barclays, HSBC, and Deutsche Bank. Alright, let's go on number 2. In Forex market players, number 2 we find large commercial companies. Companies and businesses are involved in Forex market because of their need to pay for products and services which are denominated in other currencies. These companies are not in the business of Forex trading, but for paying goods and services in the normal course of doing a business. These commercial participants are generally the exporters and the importers who are hedging or trading by reducing risk against currency fluctuations. They participate in Forex market when they are purchasing or selling foreign assets. This intervention facilitate currency transaction. Many large commercial companies are also players in Forex market due to their hedging and managing the currency risks that may arise as a result of their fundamental commercial activities. For example, companies like Apple and Microsoft can also intervene in Forex market by exchanging large sums of United States dollars to Japanese yen when purchasing companies in Japan for their products, or if they believe a certain currency is safer to hold their capital or to protect their capital. Another example, a German car manufacturer who exports in the United States, when he expects to receive 10 million euros worth of sales within the next quarter or within the 3 months period of company's financial calendar, to hedge against the possibility of a United States dollar decline, which would affect the amount of euros it would receive once converted, the German car manufacturer would short or sell 10 million in euro forex futures market. On the other hand, if a United States car manufacturer expects to export 10 million United States dollars worth of cars within the next quarter, he would long or buy the equivalent of 10 million United States dollars in euro forex futures contracts. Alright, that's how commercial companies intervene in the forex market. Let's go on number 3 in forex market players. Number 3, we find central banks of countries. Central banks hold the key to controlling the supply and the demand of national currencies. Hence, they play a very important role in the forex markets. Sometimes the central banks of countries intervene directly in the forex market when they are not satisfied with the current exchange rates of their currencies, if they found that the current exchange rate is either too high or too low for the overall benefit of the economy. When central banks of the government find that their currency is over and underpriced, they just will induce massive buys or sales to influence exchange rates. Examples of some prominent central banks include the US Federal Reserve Bank, the European Central Bank ECB, the Bank of England BOE, the Bank of Japan BOJ, and the Bank of Canada BOC, the Reserve Bank of Australia and New Zealand, the Swiss National Bank. Those are some prominent central banks, and each country in this world has its own central bank. Alright, the Bank of Japan is well known for its intervention in the market, as the Japanese economic backbone lies in its exporting activities. A weaker yen is more beneficial in stimulating exports. When the Bank of Japan finds that the yen is getting much stronger against the United States dollar or the euro, it may step into the open market to depress its currency by selling yen against United States dollars and euros. This act of central bank intervention may cause other institutional players to follow the suit and further drive the currency exchange rate towards the rate that is favored by intervening of central bank. At number 4 in forex market players, we find institutional investors or speculators. Institutional investors or speculators include hedge funds, top money managers, and private investors companies. Large hedge funds and investment management companies are capable of moving the forex market in their transactions. These funds employ traders who actively speculate in the forex market and act as clients of large market makers. The most unforgettable example of a hedge fund leaving its legacy in history in 1992 is when George Soros' Quantum Fund made an estimate of $1 billion of United States dollars in profit by shorting the British pound. Subsequently, George Soros became known as the man who broke the Bank of England. Alright, at number 5, from the forex market players, we find forex brokers. The emergence of online forex brokers made forex trading available for private individuals. In the past, only wealthy individuals could speculate in forex market, but now things are different. What is forex brokers? Forex brokers are firms that provide retail traders the accessibility to an online forex market. This allows them to buy or sell foreign currencies. Anyone can simply simply open a trading account with a forex broker and trade currencies online with few amount of money. Forex brokers also offer a high leverage nature for retail traders, which gives an opportunity for retail traders to control positions with low capital. There are basically three types of forex brokers: the market maker brokers, ECN brokers, and STP brokers. Let me explain it to you all of these types of brokers. The first one, the market maker brokers. These brokers set the buy and ask prices by themselves. This means that when you buy, the broker is selling it to you. When you sell, a broker is buying from you. They mark up the spread and also they have wider spread. Alright? The electronic communication networks or ECN brokers. When you place an order by using these brokers, your order is placed directly to the actual market of the banks. This means you are not trading with brokers, you are trading with the actual market or real market of the banks. At number 3, we find straight-through processing or STP brokers. These brokers combine the system of market makers and ECN brokers. When you use these brokers, some of your orders are placed directly to the actual market of the banks and the others they trade against you. At number 6, from the forex market players, we find retail traders. These are individuals who trade through forex brokers. Generally, they trade in much smaller lot sizes. A retail trader is an individual trader who trades with money from personal wealth rather than on behalf of institution. Individual retail traders, most of whom trade in much smaller size compared to those of banks, they generally trade through forex brokers instead of directly accessing the interbank market. Guys, all of those are forex market players. I think you understand very well. Those who involved or participant in forex market. Guys, in this 21st century, where the most important thing is knowledge, it is not just a matter of working hard, but also a matter of working smart. The main reason why many traders fail or defeated by the market is because they lack knowledge. Knowledge is the key element that can open many doors in this 21st century. If you have an intimate knowledge of how something works, you can then come up with ways to exploit what you know to your advantage. This applies to forex trading as well. Guys, work harder and smarter in silence and then let your success make the noise. Do you still want to level up in forex trading? Don't forget to subscribe, like and share the video. See you in another lesson. Bye bye.